Okay, good afternoon, everyone. Thank you for joining us here. If you're here with us, my name is Demetrius, and this is Akeelah Traders. We're going to do our live market review today. So today is Tuesday, August 18th, 2026, and I thank you guys for joining us. I'm going to get started here, and this time I'm going to make sure I've got everything running. Last week, I apologize if you joined us. Last week I had we had started, but my screen share was not working at the time. So I'm going to make sure that is not the case here today. And we're going to get moving. So give me just 1 second with that, and then I'll be ready to start. Okay, and today we're going to start with taking a look at Nasdaq. And so let's okay, yeah. So we're going to start today. So there's several different things that we're going to do in today's market review. It's not going to be so much about finding new structures today. We're going to go through and review what a lot of the analyses we've looked at over the last couple of days or last couple of weeks, really. And we're going to go see how these markets are playing out. So if we looked at structure a couple of weeks back, we made some projections based on what the market was doing. So we're going to do some follow-ups today to see what that looks like. And of course, if there's any questions, anyone, please chime in with a question or so, and I'll be glad to address that. So let's start out with the Nasdaq. And so what's going on with Nasdaq? I'm going to walk back through our very first structural view of that one. And we were following this one back to the first part of June area. Nasdaq had hit its all-time highs. And so the structure that we've been following here is this break of structure on the daily. So this daily break of structure happened back around June 10th. And so since that time, we were able to identify a highly probable source area up in this range here. And so this was between 30,200 and 30,800. So we're expecting the market to pull back to this source area. That's one of the key strategic things that we focus on here with Akeelah. So we have a very specific, a very proprietary, a very just detailed way of how we find these high probability areas. Our demand zones or supply zones are not traditional zones. What we call our source zones are areas where we determine that a specific move originated. If there's a break of structure, we have a way of identifying, well, when is that market switching directions? And, well, I guess I should say signaling a possible change in direction. Doesn't mean it's automatically changing, but it's a way to identify when the market has sent a signal to say, hey, you know what? This current trend that we're on is likely not to continue. And so that's what we want to focus on. All right. So let's look at that. So that happened on NASDAQ right around the 10th. Of June. So we were expecting it to pull back up into this area. You see we have a short position here when it entered up into this area. So we want to find these highly probable areas. So this is not about trying to predict what the stock market is going to do. We're not trying to predict the future of things when we're definitely not at all considering a lot of the news events, what I call some of the fundamental things. So we're just looking at pure market structure here. Identifying what the candles are telling us or what the overall market is positioning to do. And so we look for this high probability area here that would have called for a short right around this area, 30,200. Stops needed to be up above these previous highs here because we did not want to see the market come back and sweep these highs again. If that happened, then that would have been an invalidation there. And so I'm going to take a look at how we first set this structure up here. And to do that, I'm going to go into Trading View. And I've mentioned this a couple of times. If you folks are not following us already on Trading View, please do so. You can see us on Trading View, a lot of the ideas and minds and things that we post on at Akeelah Traders. So I'm going to go to the look that we had on the NASDAQ back then. Excuse me. And that would have been here around July 9th. This one we first pointed this out. And so at that time, this is the structural look. So I'm looking at this break of structure that we just saw here on the live chart. We're looking to see when this market pulled back up into this area. So as long as we see it pull up to this area and reject, we can be pretty confident, not to be confused with accurate every time, but we could be pretty confident that this is a highly probable trade opportunity here. So I'm going to go back to the live chart and show that's what brought us here at that time around the first part of July. Let's go forward to that July 9th. So right around this time here is when we would have posted that. So you see how the markets played at that point. We had this break of structure down. It pushed back into this area, but it failed to close above it. We got some wicks to the high side, but it failed to close above. So that tells me that this structure is still in place, this bearish structure here. And so the projection for that is for the market to push down to this 26,920 area, just shy of 27,000. That's what we would have expected as of that time. So let's see, as we fast forward, we'll see the market did push down, and this was a pretty significant push down. Not sure why TradingView keeps cutting this off. But this pushed down almost to this area. So we got very close to this. And now what we've seen in the last couple of days or so is that the market has pushed back up once again, fighting to get back to this resistance area. But if you'll notice what's happened between yesterday and today is that the Nasdaq pushed back up to there, but as soon as it got to this supply source. So again, we were able to see this source back here ever since June 10th. This yellow box here has told me that this is a high resistance area. So when and if the market pushed back to this area here, I expect to see that rejection. And that's exactly what happened yesterday. Going into today, it got just barely above this 30,200 area and got slapped back down to the downside. So as of right now, this structure on Nasdaq is still playing out. I still expect to see the market continue this move downward. Now, the next thing that's interesting here is this zone here that we have identified as a daily demand zone. This was previously the support for the market. It got broken and the market pushed back up. And so it stayed, that support got compromised back here. Once we fell below it, this area turned into resistance. But the market did push back up, and we have once again had now on the Nasdaq, a break of structure to the upside. And so this market is pushed up. I expect to see this same daily demand zone, exact same area, get retested again to see. And this will be the battleground to see if the bulls are going to maintain control or if the bears are going to continue to push this down. So as of right now, the area to watch because of this break back above this demand zone is to see, let's see, this is right around 29,000, 29.1. So between 28.6 and 29.1, this is going to be the battle area here. So if we hold above this, as you see, my bullish projection here shows us if we hold above this, come down and retest this area and find support and get bullish response, we can push back up into this area and maybe eventually break it. Okay. All right. So that's pretty much what I want to look at on NASDAQ. Before I leave that, let me go to the hourly down here. I'm just going to drop down to the hourly just to see how strong that rejection was and when did that happen. Let's see. So this is the zone here that would have been all of our resistance area. And so we got this rejection here. This was sometime overnight yesterday. So Monday, 4 a.m. And so over the weekend, the Sunday night into the early morning push is when the NASDAQ pushed up to here. And you can see that's a very strong rejection. So that just tells me that that zone is valid, that the sellers are waiting there and have been accumulating there to push that market back down. Okay. All right. So let's see. The next one I want to jump to is going to be, let's go to AMD. Let's go take a look at that one next. All right. So AMD, what we're following here is, let me just close one of these so it stops that. Okay, so AMD, what's interesting with that one is I'm going to go to the post on AMD and what we're looking at. And so it was a post on TradingView, again, back from the first part of August, so just a little over a week ago. And let's look at this to see what did we find here? What was interesting about this? And what I want you to see is a very similar, so you should see a very similar pattern, similar structure that we've been talking about in all of our, assessments or market reviews. So my question here was, AMD, is it time to dip another chip? Kind of playing on the chip manufacturer. So here, this is a similar thing that I saw. So daily demand zone. AMD has been pushing up since, wow, this thing's been very strong back here since below $200 back in the first part of looks like the first part of February, March. So it's made a huge move from $200 or so all the way up to nearly $600. So at the time, if we look at this, you can see a where our daily demand was at that time. So this is what's important, is you got to be able to find the right demand zone. So just looking at the market and using trend lines and using RSIs and using momentum indicators, MACDs, and all this other kind of stuff, it's not going to help you find where the true institutional demand is for that. But in our system, we're able to identify that this is this demand zone area. So as much as AMD had pushed up, as long as it stayed above this demand zone area, we're doing good. The market is healthy. This could be a healthy pullback and it could continue. But the error or the issue came on July 16th. And so if you see here, I have that highlighted. This was a break of structure. And so a break of structure, if it's done properly, done the way that we're finding these zones, a break of structure signals that's a very significant signal from the market, from huge players in the market. We're not talking about a bunch of retail traders got together and decided to sell. We're talking about institutions that are moving billions of dollars. When we see this kind of a signal, that's trouble. So the expectation was, again, we see a break of structure. I expect this to pull back up into this area here. And if this signal, this flag that was given to start with, if it is a true warning sign, then we will see a rejection once we get into this area. So that's what I saw here. So on August 5th, we were able to post this and say, hey, I see something going on strange here with AMD, and is it time, for this chip to fall? And so at that point, let's see, it got as high, maybe up to the 550 area or so. Earnings were coming up on AMD. They had earnings on August 4th. So this was the day, the evening of, I think, of those earnings. And we were kind of saying, well, what is going to be the expectation for AMD? A lot of the pundits, a lot of the, strategists, and just noise in the market was that, hey, AMD was going to have great earnings. It was going to push up and continue to go higher. But the point that I made with this post was that the structure had already told me that it was more likely to fall. And so this is before earnings. So if the structure told me that as of July 16th and maybe showed me the rejection July 23rd, 24th, then my main point is that earnings coming along on August 5th is not going to override that structure. And so we'll see what happened with that. Let's just play fast forward to see where we are. We'll see we're still dancing around in this area. AMD did not push up again and did not go back to 600, 650, 700 or whatever the way folks were expecting. But what's actually playing out is, one, we had this rejection here at the supply source. It pushed down. And since it pushed down, I made a point in this particular posting that not only did it push down, this was a source area. So normally, even if a market has a structural break and we see a breakdown and a push up, when it falls, it's supposed to come and hold this area. This was on the daily, at least. It was supposed to come and hold this demand source area, which means I should not see a close below that. So if we get a close below this area, that's even more of a signal to me that something broader is going on. So I made point of this, seeing this close. And again, this was prior to earnings. on what day that is. Well, it's got to be a day or so prior to earnings that that something just was not going to play out right with this. So since that time, what we've seen AMD is continue to try to push up, but as of right now, this daily demand zone, this is similar to what we saw on Nasdaq. This daily demand zone is now turned resistance. So the resistance for AMD now is this area. So somewhere between 503 to 526. So as long as we fail to recover this area, you're going to see a push down in AMD. And that's what we've seen these last couple of days. On last Thursday, the market pushed bullish back into this area. Notice we did not get to the top and close above it. Friday came, rejected that. And you'll see with today's opening, I don't know why didn't push to Monday. But let's say Monday pushed it down to 484. Let me go to the live here on AMD so we can see exactly where we are. Okay. Yeah, so this is Tuesday. So today's back down to like 484. So why is it continuing to push down this way? The structure is already in place. So what I'm expecting now is that this daily demand source that was broken, it's already been compromised. So the market has already pushed down to the point it's hit one of the first target area, what we're saying would have been a potential, not a reversal, but a potential place to take profits, because I expect to see a pullback was right in here. The market came right to there and pushed back. So the next time this fall goes down, I'm expecting it to come back and retest this area right in here. So this is going to be somewhere between 425 to 435. That will be the second target area for AMD. So I'm expecting to see that. And based on that rejection that we saw, there's no reason to anticipate that that's going to change. Okay. All right. So that is it for AMD. Let's go to the next one I want to review today, and that will be, let's go to Seagate. Okay, yeah, Seagate, because Seagate is very, very interesting here. And I'm going to start this one with another post from TradingView. And I'm going to point this one out because I got ridiculed pretty big on TradingView about this post. I'm not sure why. I was just sharing my analysis just like everybody else does. But nonetheless, here the question I had was, is there trouble at sea? Is Seagate about to lose its bearings? And here in this post, what I'm following is the same type of structure, the same type of way that I learned to read these markets and look for highly probable warning signs. I saw those same kind of signs here on Seagate, and so here I'm focusing on the daily. I primarily like to look at the 4 hour and above, the higher time frames. The higher time frame, the better. Preferably the daily. The daily is a pretty strong time frame of what's going to play out. So when I look at the daily here on Seagate, this same process we've been talking about is Seagate was healthy, and I would even dare say beyond healthy. I mean, this thing had just pumped and pumped and pumped and pumped and pumped for a long time. So Seagate is coming back from earlier this year. Let's go even into the end of last year. It was down in this area, 200 or so, less than $200. And since then, so in this year's time, Seagate is pumped from sub $200 all the way up to $1,200. I mean, just almost in one consistent pump and move. Markets don't do that, folks. That's not healthy. So earlier when I said beyond healthy, that's what I mean. That's beyond healthy. That's abnormal. We're getting to some abnormal activity here. And what happens is when markets tend to get overextended like that, there's going to be, at a minimum, there's going to be profit taking. So even if the company is healthy, the market is strong, the technology is good, AI is booming, this is storage. Seagate is big into digital storage. there's got to be profit taken. There's got to be significant pullbacks. So what I see here is this area right in here is my highly probable demand zone. As long as Seagate pushed up in here, hey, it stayed down in this area and recovered, that's fine. Same thing right in here, came to this area, recovered, that's fine. This is a problem. So the problem surfaced when we had this daily break of structure down on July 16th. And there must have been a lot of stuff. There was a lot of stuff going on July 16th. That matches up with several other areas. So with this daily break of structure down, what I was expecting to see, as usual, is I want to see the market push back up into this area to retest. So this is now the source of that move. So if the market pushes back up into this area and rejects, then to me, that's confirmation that this initial signal is saying it's time for this market to go lower. We need to either regain ourselves, rebalance, build up more momentum to continue to go higher, however way you want to classify it. It's saying, hey, this train is not going to continue to push up anymore, at least not at the momentum that it's pushing up now. So let's see, after this structural break here, we push back up. And actually, we have not quite gotten there, at least as of this posting. So this was, I posted this 2 days ago. So I think this was on Sunday I posted this. But anyway, at the time of the post, Seagate was sitting at 970, had gotten to almost 990. So I'm looking for this area for Seagate to push up to this area here. But if you see my short positions is if it comes up to this area, I'm expecting it to reject. So this is anywhere close to 1,000. Just say if it touches close to this 1,000 area, the bottom of this area is 1038. The bottom of my entry is like 1030. So somewhere in this area, if it gets close to this, I'm expecting it to come in here and get slapped back down. And so let's see how and if that's going to happen. Now, if it does, at the time, this is the mindset. If it does, these are already identified structural areas as to where it's most likely to go. The biggest one is going to be, well, the first test, like these others, is going to be come back to this demand zone area. So this is going to be 855, 856, somewhere 860-ish area. That will be the first test if we get this rejection to see it come here. It's going to fall back to this area to see if this is real support. This demand zone here, once it got broken, the market has tried to push back up, but it could come back and prove itself to be support again. I don't know if that's going to hold, but that's going to be the most likely first test of that. Should that fail, which I would expect it to after getting a rejection like this, the first real target becomes this daily fair value gap here around 610 to 640. So in this area here is where I would expect to see Seagate fall. And time-wise, I'm not sure if that's going to be over the next couple of days, next couple of weeks. The time is not really important as much as the structure and where the target is. So if you see here, the comment that we made at this time was there's a daily break of structure down. We're waiting for the return to the source and a rejection. So I'm waiting to see if it pushes back up to this area and rejects. If rejected, the target is the weekly demand zone. This is 440. So this is way down here. Now I have these fair value gap areas identified as intermediate targets because those are areas where the market, if there is enough volume and enough buying interest, they could rebalance at these. But because this is a daily, then the structural target for that is going to be down here, this weekly area, weekly or daily demand source. And so one of these areas, and the highest of those is this area right in here, around 440. This is the weekly demand. Now, I'm going to go look at the weekly chart. Let me go back to the live of this one here. So I can move these values a little bit better. So I wanted to review that post, though, and show why I'm saying we could potentially get there. And now if you see, this is current, what's played out. We got very close to this. This pushed up. Let me see. How high did we get to 1,000? I had the bottom 40. Let's see how close it got. Okay, it got as high as 1013. So it got pretty close to this area, but today is the first day, Tuesday, we see this rejection here. If you look at this, go down to like the 4 hour or the hourly, that's yeah, it would look like we tried a couple of times to push up into there, but this is the rejection that I'm looking for. So I'm expecting it to see first come down to this area here, and then we'll see, if that's enough to hold it. Otherwise, these targets here remain in place. So let me go back to the posting there, because I want to highlight some of those things. So here, what I explain in this is that these are structural targets and structural, it's a structural reading that I'm doing here. So we had our first break of structure when it failed that demand zone. So this was back on July 16th. The price had already fallen at that point. It had been as high as 1140 and it come down to 740. So it's very reasonable to expect, and I'm talking about this break right here that went from as high as 1140 down to here to actually to 700 or so. So my point with this was, if this kind of break had already happened, if we'd already seen that kind of a move, and from 1140 to 700, I mean, that's a very substantial move, 40% move. If we'd already seen that, then why is it unfathomable that if we get a bigger rejection of this source, that we're going to see this down? That was my point with this. But let me go down here, because I'm going to laugh about this, because someone commented in here, and I love to get comments. I love to get feedback from everybody. So no fault of this person here, but he made this comment on here that you have to be the dumbest person on earth to look at a stock that's literally done nothing but go straight up and think, yeah, I'm going to short this. I'm like, okay. Very interesting comment, and pretty ridiculing comment there. But hey, everyone is entitled to their opinion, right? And then same person came back. I guess he wasn't. I irritated this guy for some reason, but he came back and said, hey, I'm rolling on the floor laughing. Now I know who never to take advice from. It's this guy. Okay. So again, I can appreciate the fact that he exercised his, comments and made his, I don't know what to call it, made his ridicule or whatever. But this is the kind of thing here where the only person that's dumb or ignorant, I'll just say ignorant, I'll keep it, on the upside, is pretty ignorant to think that a market that has done nothing but go up, 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 that it's not reasonable that it's going to come back, that it's going to pull back. So that's a very dangerous thing, folks, is to think that because something has continued to go up, 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 and up, that it's going to continue. And I would be fine with saying that I have the same mindset. But from a structural standpoint, my structural mindset is that a market that is bullish, that is going up like this, will continue to go bullish, and it will continue to climb until and unless there's a break of structure. And so if there is a break of structure, then I no longer expect that to continue. And so that's what's my point here. And when I looked at this chart, let me see if I can pull this up a little bit. If I looked at this chart, the problem with Seagate, I'm gonna have to go to the live chart because that one cut off, is in this big move up, the last time Seagate had a break of structure on the daily to say even that this thing is gonna slow down, that happened back in October. So, well, October, and then the last one was November. So October, November. So that was the last time it had any kind of structural crack to say, maybe something's going to go on. Both of those recovered very quickly. Within a week's time or so, they had recovered. Same thing with this one. Within a week's time, it had recovered. And so that just signaled small crack. Maybe not anything big to be alarmed about, but it kind of raises your ear a little bit. Second time it happens, okay, still a small crack. But now what we're dealing with is the Titanic has got a small crack, has had a couple of small cracks, and now it's got a big crack. So this kind of structural break, to me, is much more significant than these. It wasn't as big of a drop. And after I zoom in, I'm gonna go and look at the weekly chart on here. This is the other part of why I suspect that there's something funky going on here, is because if I look at the weekly structural area, again, the way we create zones, my weekly demand is way down here. So if I turn these off, just look at this from a weekly standpoint. If I'm saying my weekly demand zone area is down in this area here, this is down to the 350 to 400 range, and we're up to 900, got as high as $1,100. Super, super, super overextended. So is there trouble at sea? Absolutely. So this gentleman that disagrees with me, hey, again, he's got his right. But I'm pretty sure that his thought was a little bit different when I'm going back here to the hourly. Now is when we look today and we see as we got close to this area here, I mean, there was an immediate rejection here. And a lot of things are down today, but hey, Seagate, it dropped. This is almost what ended at 9%. It dropped right at 10% or so. So, I think that crack is something that we're going to have to watch. We're going to have to keep our eyes on, because if we come back to this area here, this 850 to, let's say, 800 to 850 area, and this area does not hold, it's going to be off to these fair value gap areas. So that's my assessment on Seagate. Again, just looking at it from a structural standpoint and where the likely moves, the most likely, most probable moves in the market are, that's what it looks like. Okay, the last one, I'm going to wrap up this weekly review with going back to look at our friend gold. Let's see if all that glitters is gold. And I see already there's some, I have to turn these back on. There's some notes, some news reports or whatever. Gold retreats as bond yields. Excuse me. So gold retreats as bond yields surge to the highest levels in decades. Okay, maybe. But let's look here back at our analysis and see why is gold retreating. And from our standpoint, what we've been watching on gold is this H4 area here. So I'm not going to go back and recap everything. You can look, if you're interested, you can go back and look at the previous analyses, the previous weeks, to see when we looked at gold. But we've been following this since it's high back up in this area, and really expected gold to come all the way down to this 38.85 to 39.70 area. So this is the rebalance that we were looking for. Gold finally got to this area. It produced a daily breaker structure up, which was a break of this zone, and it came back to this source. So, excuse me, from our standpoint, gold is bullish at this point. And so it's bullish, and it's making its way back up to this previously broken demand zone. So it's pushing its way back up to 45.50. That's the projected path for gold. Now, why are we getting hiccups right in here is because we previously stated this. You can look in the TradingView posts about this, and in the previous weekly reviews where we talked about gold. You can see that this area here was going to be a pretty contentious area. So getting back above 4,400 was going to be very important for gold. So we need to see a close above and a retest of this area. So particularly the upper part of this. So this top of this is right at 43.90. And you can see why gold is struggling right now, because the first day that we came above it, we broke above this on August 10th. The next day, immediately closed back below it. Broke up above it again. The next day, immediately closed back below it. The following day, failed to break above it. And then we broke above, and today is just a response. So until we clear this area here, I don't expect to see I mean, it's not surprising to see this pushback, this kind of pushback on gold. So for me, this has nothing to do with bond yields and them being the highest levels in decade. Who cares? The market's already told me, and really, since we had this break of structure up, and I saw that it's going to be pushing up, I already knew that this was going to be resistance area, and that gold was going to see some pullbacks here. The pullback that I'm watching, though, that is of concern is breaking back below the bottom of this area. So if we close below this, below 43.30, that's the only thing that really matters that's going to be significant to me. And if it is, it just says that, gold may need to retrace a little bit further, possibly even back down as low as this broken supply zone to get strength to continue higher. But, and if we maintain this, as long as, so this push down came, and notice how this came, I don't know what today's low is. I guess I could zoom in here and see. Looks like the low of that candle is like 43.34. Well, the bottom of the zone is 43.30 or 43.29. So it came all the way down to test the bottom of this zone. This is still buy territory, in my opinion, as long as it doesn't close below here. So if we get to the bottom of this area, we should be buying it, pushing it back up. The market should be buying it. I'm not saying you should be buying it. You do whatever you're led to do. This is not financial advice for you. I'm saying the market should be buying this. We should see buying responses here, bullish responses here. So anywhere in this zone near the bottom, it should be buying to see it push back up. If we close below it, that's where I would say, okay, maybe there's concern that gold's just not ready for this, and we need to look to the higher time frame. We need to look to see what the weekly is doing, because the daily doesn't have enough structural demand to push it up. So here on the weekly, we have not had, let me turn all of this off and see. Yeah, so here on the weekly, we have not had any structural break on here. So weekly, we're still in potential holding area on gold. Yeah, this would be my weekly areas right in here. Okay, so I can turn this back on. So weekly, this demand is still here. So it could come all the way back down to this area and bounce and retest again. So what I'm looking at to conclude this again is this lower area. As long as we hold above this on the daily, we're fine. I don't expect to see anything significant happen with gold. Bond yields, if they surge to the highest levels in decades, we'll see what happens tomorrow. Maybe they go back to a low level. But my point is gold is not dependent on this. Gold is dependent on the structural areas here. So let's watch this. We'll see how that plays out. I would expect if it holds this area, but we do need to see a healthy retest and close above this. So we need to see these candles close above, retest it, and preferably stay above the top of this area on the daily, and then give a bullish response. And we'll be back off to this 45.50 to 46.45 area here on gold. Okay. All right. So that's going to wrap up my review for today, the weekly review. We got several of these done during this short time. So if you were here watching us all the time or for any portion of the time, I greatly appreciate it. Thank you for joining us. If you have any questions, please feel free to leave some comments here. Please like our channel, subscribe if this is providing any kind of value to you whatsoever. Also encourage you, as I mentioned earlier, to follow us on TradingView. So on TradingView, it is Akeelah Traders. You can see several other posts and different ideas and things like that. I'd love to get your feedback on some of those or comments. But subscribe here, and then you can also see our online page at tradingacademy.akeelah.io. You can come here and see a lot of other analyses that we've done. You can sign up for our weekly free Zoom Q&A sessions that we have on Tuesdays. That's immediately after this YouTube live. So if you sign up for those, we can jump in on those, look at some charts, answer your questions and concerns. in a live format from there. Or you can see some of the other things that we offer here at Akeelah Traders. But I appreciate you all again. Thank you for joining us, and I will see you next time.